Kyle, fantastic to have you back again. It's been a while. End of last year, you created quite a sensation with a series of interviews. Both it started with Grant interviewing you about your views on China and some other views, and that led us into a series of interviews that were sensational, I think, to say the least.
They were a lot of fun.
Yeah, and that was, from everybody from Graham Allison through to Miles Kwok and Steve Bannon. I think it was a eye-opening experience for so many people. I'm just pleased to get you back. You reached out recently and said, listen, you want to go through really the full China thesis so we can really dig into that and have a look at it, because it looks like there's a lot of interesting things going on right now. And you've alluded to something that may come in due course, which is a kind of a knock-on ancillary to this that is a really big story that we won't talk about this time around, but just will allude to that there's something bigger out of this that has never really been talked about on Real Vision. I think that's going to be interesting.
Right, that'll be a lot of fun. 4 or 5 months from now, you and I will break a new idea that it has its own idiosyncrasies. It is a Southeast Asian idea, but it's one that has reached a quiet panic and has yet to reach a newspaper. And so that will be a fun one, Raul, but we're not quite ready yet.
No. So let's take stock of where we are in the China story, because I know you've been making some presentations on this recently, and you've now got a really fully fleshed out thesis. So talk me through where the thesis is now.
Sure.
And what's going on.
When Grant and I spoke, again, the way that we look at China, the way that I think the world must look at China is, again, we have the presentation here where we have two worlds. You have China's world, and then you have the rest of the world. And that's how China looks at it too. They have a domestic world that they control. They control everything. They control the price level and the narrative and the printing press and the police, and they can do whatever they want to do. And they can do that ad infinitum, especially if they don't interact with the rest of the world. But unfortunately for China, they actually have to interact with the rest of the world because they're desperately short resources, desperately short energy, desperately short food, desperately short base materials, all of these things that they must go acquire. And no one accepts RMB as payment because it's just funny money.
But there was an argument that a lot of people are making is, they're doing these RMB swaps and they're opening up these lines so they can trade with Brazil and Argentina and RMB.
Yeah, how's that going for Argentina? I'm not quite sure yet. And Brazil, come on. And I know that the Chinese have spent a lot of time in the Middle East trying to convince MBZ to accept RMB for oil. It's like Popeye asking, to buy the hamburger today, and or Wimpy trying to buy the hamburger today and pay someone on Tuesday. It's like, in the end, everyone has to be able to convert back to something that's actually usable.
Yeah.
So you look at BIS and you look at SWIFT. China purports to be the second largest economy in the world at 15% of global GDP at today's exchange rates, and yet you look at cross-border settlements. Less than 1% of cross-border settlements in the world settle in RMB.
So there's nothing they can do about it, really. They're trapped in dollars.
Well, there's something they could do, right? They could just open their capital account, but we know what would happen then.
Well, don't they have to do that? I mean, this is what I want to get into, because I can't, having talked to you and having looked at it myself, I can't see how they can keep it closed and still get the dollars that they need.
So that's key. You're hitting right on the key point. I think they could have their world of make-believe and their world of printing RMB and running their economy and convincing economists like Krugman and others that their purchasing power parity is higher than anyone's in the world. But the denominator is inflation, so they massively underreport inflation. That's just a fallacy. But I think that can go on for a long period of time, as long as what? As long as they're growing their reserve balance, as long as they're growing their working capital, which is imports and exports. As long as they're growing that number, FX reserves, they can keep playing with their domestic economy and playing with the printing press.
But when I look at global imports and exports, there's an odd thing going on. It happened in 2016, 15, is that they're all kind of shrinking. So it doesn't look to me like China is growing either side of that equation.
No, I mean, if you look at industrial activity, we're going to skip forward in the presentation. But if you look at pure subcomponents of China's industrial production, this is using NBS and one of our consultants. There are 5 subcomponents. Energy is the only one that's above 0. So you have infrastructure, transport, consumer goods, and property. Look at the consumer goods number printing down 10% year over year.
We've seen it with car sales there, all sorts of stuff.
Car sales just printed down 18%. That's the most they've ever been down year over year. And then think about in nominal terms what volumes have been, right? So you have to think about car sales in percentage terms, then think about a number of cars. 18% of the largest SAR China's ever seen. So think about how many cars that is. Right? So the point being is they've been contracting their economy. They contracted their fiscal impulse beginning Q1 of 2016 when the money was really running. So Xi came out and said, national security is financial security. And that's when they started contracting their fiscal impulse. They were running a 15% of GDP fiscal deficit at the end of 2015.
That's ludicrous.
I mean, it's as large or larger than any country in the world. And the way they can do it is they printed a lot of RMB domestically. But what has helped them or enabled them to keep doing this is they've been growing the reserve balance, i.e. they were the world's factory floor, right? Their labor was cheap, and the way that China really subverts WTO rules is they give free property and free electricity to national champions, and that's how they grow big companies quickly, and they actually don't lose money until they get much bigger, but they have all the basic inputs for free, and so that also can, as a state, if you and I were doing that and we said, you know, we want to go to Europe and ruin the European aluminum smelting business. You and I could do that if we had free electricity and free property, because one of the biggest inputs to aluminum smelting is energy. So they did that to the U.S., right? They dismantled our aluminum business. They were starting to dismantle our steel business until we started.
They didn't just do it to the U.S. I mean, they did it globally.
Globally.
They just hold out everybody.
That's correct. So the point I'm trying to make is, again, when you look at this page here, you see that their augmented fiscal deficit reached 15% of GDP. And look back to 2008 and 9 when they went to the gas pedal to save the world from the global financial crisis. Their fiscal impulse was almost 3 times that by 2015. And now it's starting to contract, and it's contracting 5 or 6% of GDP.
It feels that something happened in 2015 when the dollar rallied that China never recovered from.
Correct.
And something happened. There was the capital outflows that were happening over the time, and we'll talk about capital outflows later, but there's something changed, the whole global demand-supply situation. If I look at world trade volume globally, it fell and it never really recovered. It's kind of flatlined. There's something broke in the world at that point. I don't really know what it is, and I think it was probably China.
I think you're right. I mean, if you think back to the timeline, the 3% of the mini deval in China happened in August 2015, and from August 2015, basically a year later, they lost what, $1 trillion worth of reserves.
Yeah,
$1 trillion. They had 4.2, and they had 3.2. There are a couple of really interesting observations that we make about this, and we'll start with this chart here. The red line, if you have a closed capital account, the amount of foreign currency or your offshore currency that should trade each night is just the sum total of exports plus imports, right? If you have a closed capital account. That's the red line on chart on page 6. The yellow line is actual CNY turnover, which is reported every night by the Bank of China Hong Kong. The difference between those two lines, notice those lines stayed in perfect unison until just before the mini deval. And then they
if it's closed, it should be, right?
Should be right on top of each other, right?
Yeah.
There might be some noise, but let's just say on average, if you're to smooth it out to 3 months, 6 month running averages, they should be right on top of each other. And these things diverged going into the mini deval, and they continue to diverge. Once again during the Trump election, once again now into the trade talks.
This is the largest divergence in history, right? And this is a period where we've just seen the currency strengthen a little bit. You know, everybody's saying it's fine, there's no problems.
And you're not seeing any diminution in the aggregate balance of reported FX reserves either.
So where are these outflows? What's going on?
These are illicit capital flows that are just going unreported.
So then what are their reserves?
We believe they're reserves. So a few Nobel laureates went in and explained to China in early 2016, maybe late 2015, that there's a certain reserve adequacy formula that a heavy export and importing country must have, as call it minimum levels of working capital for your machine to operate.
Yeah.
And a lot of those inputs are how much short-term debt do you have, how much long-term debt, what your imports, what are your exports, what are your near-term maturities. You know, there's a formulaic set of inputs that gives you an output. And the output for China in early 2016 was 3.2 trillion. So imagine when they lost $1 trillion, it got to 3.2, it's flatlined magically at 3.2.
Like all the other statistics out of China, right?
Just because you see this, you see the capital flows continuing to diverge.
But meanwhile, we know they've trapped foreign corporations' capital in China.
Correct.
So it's not that money going out. Some money's going out somewhere. They've stamped on a lot of the billionaires exporting capital, hiding capital.
Yep.
So where is this capital? Whose capital is it?
So there's a really fun chart of something that happened recently.
It's like a detective game, this whole thing, right?
Yeah. Well, it's exciting when you start to see things that are kind of corroborating your ideas. You're going to love this one, Raul. You of all people, Mr. Chart himself.
I love a good chart.
In November, precious stones, so diamonds, sapphires, opals, and the like, so November 2018, they accounted for 53% of China's total imports from Hong Kong, up from 2.9% in Q1, so they went to 53%. But at the same time, sales of jewelry dropped 4%. So this is a fascinating chart. When you look here, notice that this line of precious stone imports just went straight to the moon before the devaluation.
Strange that, isn't it?
Strangely. So I showed you on the other chart where prior to August 2015, there was a huge spike of outflows.
Yeah.
So those that were in the know, those in the Chinese Communist Party that knew that this deval was coming, ran. They got as much money out as they could. They bought as many precious stones as they could at the old exchange rate, at the stronger exchange rate.
Yeah.
And then post-deval, it doubled again. And then when Bitcoin became big, it collapsed. So the wealthy Chinese figured there's a better way to get money out, and that was true.
Yeah.
And if you look at the Bank for International Settlements chart on Bitcoin, it didn't print out so well here, but I can show you. 95% of Bitcoin settlement was CNY based until January 2017. When did Bitcoin collapse?
Yeah.
The same time China closed the door on Bitcoin, Bitcoin collapsed. And then you know what happened? And then
Bitcoin collapsed in 2018.
At the beginning of 2018, right? Or the end of 17.
Was it the end of
It was the end of 17. China closed the door here, and then it ended up collapsing towards the end of the year.
Yeah.
So what I'm showing is all the different avenues of being able to go out and get your money out of China. Like, how do you get it out?
That's right.
Right? You get it out by over invoicing if you run an import-export company.
Yeah.
You get it out by going to a bank like Minxing Bank and saying, I've got a $1 billion RMB over here. How many dollars will you lend me against my $1 billion RMB? And then you just don't repay the dollar-based loan.
Yeah.
Right? Those are the ways they do it, but they charge you 30% to do that. So it's kind of an exit tax.
Yeah.
That's how the billionaires get their money out, but the way the masses get their money out is they have to buy things. They can go to Hong Kong because, as you know, CNH and CNY, there's no limit to the exchange in Hong Kong. And so they buy watches, they buy jewelry, but more importantly, to get real money out, you buy really nice gemstones.
Yeah.
And
but they also
Bitcoins.
have from what I've seen, is you've got an ability that you get a buyback guarantee. So what you do is you buy the gemstone in Shanghai.
But the guarantee is 90% of your original price.
Exactly.
So again, there's a VIG.
Yeah. It's just that,
It's the price you pay to get money out.
That's right.
And
But
so
how are they doing
what's
it in
interesting
such...
about that, Raul, since rates have converged,
Yeah.
right? Chinese and U.S. rates are now equal to one another. So the 1 year forward cost of, let's say, selling CNH short is now at parity with the dollar. It used to be as high as 5-6% of negative carry.
Yeah.
So now it's at parity. So why would you pay a 10 to 30% VIG to get your money out?
Yeah.
Because you know it's coming.
Yeah. And it reminds me that the behavior reminds me before Argentina devalued in 2003 or 2, whenever it was, the big deval, all the elites got their money out.
Yeah. Think about the tequila crisis in Mexico in 95.
Yeah.
What happened? The elites got their money out. Think about Thailand in 97.
Yeah, same thing.
The IMF was urging the Thai government to devalue, and they wouldn't because all the military leaders hadn't gotten their money out. So the central bank held the peg until the military leadership got their money out. In the tequila crisis in Mexico, The finance minister of Mexico, the day before the devaluation, made an affirmative determination on TV that Mexico will never devalue. And the very next day, what happened? They devalued.
So what's interesting to me is we've seen a similar situation going on in Russia, Saudi, and China, where anybody against the regime is, or in Russia's case, did get into trouble. They allowed some people to take huge sums of money out, and that was public, Abramovich being a great example. But then there's a whole bunch of others who disappeared. There's been a lot of killing. There's been a lot of people being sent back to Russia. We've seen China, the same thing going on, and we've seen it in Saudi, this huge shift of taking all the money. What are they doing here? Are they taking some of the money back to support the reserves and allowing the right people that they perceive the right people to take money out? What the hell's going on? Because it's all related to this, obviously, somewhere.
Look, I have opinions on those three that actually differ. But there's one thing that is homogenous throughout, or at least a common denominator throughout, and it's power.
Yeah.
And so, you know, when people like Jack Ma take pictures with the Queen of England, that is potentially usurping the power of the almighty Xi, and that's probably bad for your net worth and your ability to travel with your family.
But did she want Jack Ma to take so much money out of the country? Or is this part of the crackdown of saying, you've taken too much money out? Or she is only saying to some people, you can take money out, but you better not. We want your money back.
No, I think ostentatious displays of wealth are not good for China's leadership. And I think power or perceived global power is not good for China's leadership. So as you've seen, Jack Ma gave up his VIE structure ownership to 5 unnamed individuals in a nanosecond, and the world just kept moving on.
How can, that came up in the interview, I think it was with Steve Bannon that you did, and you and I have talked about it. I cannot fathom, imagine if that happened to Apple, right? That's the equivalence.
It is.
That Apple suddenly loses its leadership and 4 or 5 unknown people take ownership of the firm.
Right, and the world's okay with 5 unknown individuals taking over ownership. It's just like when the H&A chairman, air quotes, fell off the wall. He was clearly murdered. His bodyguards murdered him, and the bodyguards don't work for him. They work for the Communist Party. So when Jack Ma travels around the world now, he's got bodyguards with him, but they're there to look at him and not after him, right? We've been told that he can't even travel with his family. It's either him alone or his family, but they can't travel together, i.e. they can't all leave China at the same time.
Wow.
So, this is the world we live in. And I think what you're seeing is both a power and a money grab back to the leadership, whether you want to call it the despotic leadership, the dictatorial leadership. I don't know what you want to call it. Saudi was a little different. I think that in the case of MBS, he rounded up about a little more than 100 people, and he took half their money. And he cattle. You don't cattle prod billionaires and only take half their money. I think you have to go all the way, or you don't do it at all. And I think he got a lot of blowback for that. But we hear that he took about $120 billion.
That's right.
That was a big number for Saudi reserves.
Right.
Okay. When you think about the predicament they were in.
Yeah.
When oil collapsed, they were running negative fiscal balances, right?
Yeah.
$100 billion bought them a lot of runway. And so with Russia, it was Russia's Russia. We know what goes on. Who knows what goes on?
So let's go back to that chart, because that's a shocking chart to me. It's assuming that there's enormous amounts of capital flight going on.
Yes.
And it's not showing up in the currency market.
The one that shows illicit capital flows.
That's right.
Yeah. So
the diamonds obviously corroborates it.
Yes. And then we'll show you also, one of the things that when you think about how China operates, when you understand that they've now gone to current account negativity for the first time in the first half of 2018, what is important to China going forward? It's capital flows. And so when we put together this chart from SAFE and CEIC's database, when you look at the green bars there, the green bars are the current account building that reserve balance that enables China to just keep printing money on the other side of their balance sheet, running their domestic economy they want to do. That turned negative in the first half of 2018. So you see the green bars went negative. The blue bars here are, quote, net arrows and emissions, which is Chinese for illicit capital flows. So the only thing holding China up right now...
This hasn't changed trend. We still think that this is negative now. going into 2019?
Well, so I'll say that when you think about what happened in December, crude oil dropped from $75 a barrel to 40. What did it hit? Like $43 a barrel.
Yeah.
That's one of China's biggest imports.
Yeah.
Is crude oil. So that'll give them a brief reprieve on the current account side of things.
Yeah.
But again, the question with that is that a secular or is that a cyclical phenomenon?
That's right.
This is key to understand. You see the dotted line?
Yeah.
That's volume of crude importation by China using the right y-axis. And this is the dollar value of imports. So back in the end of 2014, early 2015, when crude collapsed from 100 to 30,
Yeah.
they got a massive reprieve in their current account.
Yeah.
But if you look at the volume, does that line look like y equals mx plus b? It doesn't look very cyclical.
No.
Right?
No, it's not.
And think about this. They were importing just under 300 million tons at the beginning of 2015. The most recent number is 462 million tons. Think about this. They're now importing 50% more crude in only 4 years ago. 50% more today than they were importing 4 years ago.
That's staggering.
Right? So is this a secular or a cyclical phenomenon? It is clearly secular when you look at this line.
Yeah.
And now energy prices will stabilize. So you say, well, are they going to have a positive current account or negative this quarter? And the fourth quarter is probably positive because oil collapsed. But in the long run, smoothed, they have a secular problem where they'll, from now on, will have a negative current account.
Right.
They're starting to look more and more like Argentina and Turkey and the other twin deficit countries. Because what are they doing? They're running a negative current account. They're running a negative fiscal balance of roughly 9% of GDP. Mm-hmm. So they're running twin deficits. Their FX reserves are dwindling. And they're starting to borrow a lot of dollars.
So how much of the FX reserves is liquid out of what's left?
So, you look at US...
What's the composition of that now?
Well, first of all, if you remember, when they were let into the IMF SDR basket, they said they would disclose the composition of their reserves within 2 years. Well, that was a long time ago, and we haven't seen it. So again, look at what they say and not, or look at what they do, not what they say in China, and clearly they lied to everyone with that statement.
Yeah.
But more importantly, I think getting back to your question, what does that composition of reserves look like? One thing we know for a fact is U.S. Treasury tick data shows that they own a little bit more than, or a little bit less than 1.2 trillion in treasuries.
Yeah.
So we think that their only liquidity that they have any size of is our treasuries. So they own a little bit of, call it yen, euros, pounds, but they mostly own treasuries. We think the number's closer to 2 trillion instead of 3.2 trillion, which is dangerously below adequate levels.
Yeah, because it sounds like a huge sum, but for the size of the economy and the potential capital flows, that can go super quick.
So if we're going to play large numbers here, the broad measure of credit in the Chinese financial system is $48 trillion worth of RMB. They only have 2 trillion of reserves. Think about these numbers, right? In their last banking crisis, which was between 98 and 2002, the loss given defaults were 80% of loans that defaulted. Mm-hmm. And at one point in time, they had 35% of their entire system was non-paying.
But so the counter argument always is from everybody is, it doesn't matter.
But it's China.
That's always the thing. It's China. They'll smooth it. Carl's being alarmist. Everybody's being alarmist. You're wrong, Raule. It's not going to trade through 7 against the RMB. All of this, right?
And those people sleep well at night until they don't. And
that's the nickels in front of a steamroller approach.
I think what brings this to a head is the current account. When the current account goes negative and the reserve balance is going the other way, that the rubber meets the road then. As long as that balance is increasing annually along with GDP and RMB terms, they can keep going. But as soon as those balances go, now their fiscal balance is -10, -9.5, their current account balance goes negative and it's a secular negativity, then they have more money leaving than coming in. They have to desperately borrow. And they actually change. Now they're changing their laws. They say, oh, you know what? Now Westerners can own more than half of our banks, not a problem.
That's right. Yeah.
Right?
Obviously,
please invest more in Chinese equities.
They get rid of all the shit they can.
Right? So please invest more in Chinese equities. So when you look at capital flows, this is a really important chart, right? This is from CEIC and SAFE. The red bar and the stripe bar is just portfolio investment and FDI. So without Western capital flowing into China, China can't hold this all together. Literally, we are providing them.
Which is Turkey and Argentina, right? That's the only way that they were supported.
But what's interesting about China is this gives them, first of all, their economy has given them the confidence globally to be more geopolitically assertive in their dealings.
Yeah.
It's given their military the ability to be much more assertive in the South China Sea. And it's given Xi an aura that he's made the West think that somehow his economy, his economic model is superior to that of Western capitalism. And it's all a facade. The whole thing is a mirage. The whole thing is made up with the printing press, keeping a closed capital account, and hoping the world doesn't notice it.
But can they get away with it? Can they do a smooth Japanese-style decline, 20, 30 years of below-trend growth or growth that trends lower, and just kind of work out the bad debts? You know, because Japan surprised everybody of how they actually managed it. Now, it's a different economy because they have a bunch of surpluses.
Yep.
But
the other thing they have,
it?
I don't have the chart in here. I didn't bring it with me, but the other thing that Japan has that China doesn't, if you look at the net international FX reserve position abroad, so it's the investments of Japan Inc. abroad, both from a sovereign perspective and from a savings perspective of the population, Japan's net international FX position is, call it 250% of their GDP. China's is 18% of GDP. And most of China's are the state, it's at the left side of the PBOC's balance sheet, lending to ports in Sri Lanka, buying the port in Greece, owning a Ugandan copper mine in Congo, mine for lithium and things like that. Those are things they're not going to monetize and bring home.
No.
Right? So China doesn't have that net international FX position that Japan can really rely upon to keep its dream alive. Now, Japan still runs a positive current account, and they have as much debt as Japan has a quadrillion yen of debt, right?
Yeah.
They also have a quadrillion yen of net international savings, but China doesn't. So Japan is a completely different animal.
So there's two things I want to put into this. One of the things, that I've been talking about, I think the probability of a global recession is reasonably high at this point.
What do you think it is?
About 80%.
80.
Yeah.
Yeah, I agree with you.
It's very high, and all the data I look at looks like it's coming. Could it be 2016 again, where we kind of avoid it because the Chinese got us out of it? I don't think that's coming. We saw that a fiscal stimulus in the US last 2 quarters, and it's not going to help. So we're running out of something. We're running out of ability to get around this. Looks like Australia's about to go into the recession. All of this is starting to happen. So let's assume ceteris paribus in China. They don't do anything different, but the world goes into recession. They're screwed, right?
Yeah, I think
because they can't sell goods, and then so their current account
goes more negative.
Exactly,
Yeah.
because that offsets the oil thing. Because the fact is, because we saw it happened, a similar kind of thing happened when oil fell last time. It's because world trade fell as well.
That's right.
And if Chinese cannot sell enough goods, then that's the end of the game.
I think the writing's on the wall when you look at everything that you look at. You look at Australia, you look at Southeast Asia, but look at Italy just entered a recession a week ago.
Yeah.
If you look at the subcomponents of Germany's industrial production, it's actually tracking right this minute as bad as it was when Lehman came down.
And you know what it's highly correlated to? China.
But that's my point.
Yeah.
Like, Germany's headed into a recession. The US numbers look really good right now. It's because we just stimulated at full employment.
That's right.
That stimulus, I think peak stimulus is February 27th. That's peak tax return day.
Yep.
And everything after that is just going to slowly head the way the rest of the world's heading. So the US looks good. We will be the last economy to roll. But Europe looks like it's heading into a full recession now. Australia's housing market and numbers look like they're already in a recession.
Yep.
Germany's bond yields are trading at Brexit lows.
Yeah.
It's crazy.
Yeah, and the European banks that you and I talked about before, that looks a mess.
The thing that I think people is lost on some folks is this idea that the IMF and the ECB the Troika can save, again, give Europe another save. Well, think about what they did with Greece. Like, the IMF was never designed to lend to even a small developed nation, right? They're supposed to lend to African nations and other tiny nations that run into small balance of payments problems, right? And they're kind of the last money in, first money out dip lender to help people fix balance of payments problems. They're not meant to be a lender of last resort like they were in the Greek situation.
No.
But in Greece, pre-crisis, the IMF could lend 2 times your rainy day fund if you were a member. And with the stroke of a pen, Geithner got that to 4 times your rainy day fund during the financial crisis. They agreed to lend to Greece 32 times the rainy day fund. They knew that day that they wouldn't be repaid. I've asked both sides. I've asked the guy that actually made the loan, and I've had the guy that borrowed the money, and they both agreed. Yeah. So this is a fact.
Yeah.
That was about 220 billion euros. Italy has 4 trillion euros of debt. Yeah. So I can't see a case where if Europe has a proper recession, I don't know how they get out. They're already at negative rates. Germany's already trading at Brexit lows. Germany's headed into a recession. Italy's in one. If we have a proper recession in Europe, I don't know how the euro survives.
No, I don't. I don't know how the euro survives. I don't know how the European banking system survives. And in that situation, I don't know how China can survive, particularly with Europe bad as well. It's a big part of the world. Europe's no small thing. Right. And we can see it in leading indicators. I think Australia's a leading indicator in this example. The Aussie dollar's basically led this whole thing lower all the way through. Yeah. Something in the bond market's telling us this. I mean, it's writ large as far as I can see it everywhere. And for me, look, there's numerous things. I think the US bond market is the corporate bond market is one of the issues that may blow up in this one. But China is the obvious one to me, that something may happen. So talk to me a bit about the other thing that I think exacerbates it. Talk to me about trade and tariffs and what your perspective is. Because we've talked about it, and you've been around DC, you kind of know what people's intentions are. Mm-hmm. And I'm not sure whose intention is what and what the outcome people want is.
I think whether you're looking through the National Security Council or the U.S. Trade Reps Office or the Department of Commerce or the U.S. intelligence agencies or the president and his own views, I think everyone has finally come to a conclusion, independently and yet collectively, that a global reset of our relationship with China has to be had. It's not this simple, oh, we run a $400 billion a year trade deficit with China. Let's get the Chinese to buy some soybeans and some crude oil, maybe some LNG, and we'll work this thing out. That's not it. They steal $300 billion worth of IP from us every year, according to the Defense Department and the U.S. Trade Reps reports to the president, and they earn a nice return on that every year. Yeah. That has to stop, because that's the one thing we have in this country.
It's such an intangible. How do you stop
there are a
IP?
number
Because
of things.
their court system is the usual way, and they don't have a court system that's...
But our court system, it's not written correctly. You have these rules. We can get into legal nuances, but the kind of the adverse inference rules and the rules that, let's just say, if the PLA steals technology from the U.S. and then a Chinese private company launches with that stolen technology, we don't have any recourse to the company that's launching with stolen technology, but their government took it. If we start changing the presumptions with the theft and making the burden of proof be on the other side that's using the technology, that would, in the U.S. court system, that would be a real problem for China, because we could start attaching lawsuit winnings to some of their assets here, which would be a game changer.
Right.
And there's some basic policy prescriptions that we could change, let's say banking-wise, legal-wise, and at the SEC, that would just level the playing field. If we could do a few of those things, we could make some quantum leaps in our relationships with China.
But the US
that doesn't require their buy-in either.
No, but the US has not been particularly good at clamping down on China. Even the launching of all the companies, all the fraudulent vehicles in the US and stuff like that. The US was pretty slow at actually changing legislation to do stuff.
What China is so good at is using money. Right? They use the Achilles heel to a democratic system based on capitalism is money. They buy everyone, right? They buy senior politicians in the U.S. They buy, just recently, the Washington Post puts China daily inserts in the Washington Post as if it's news. It is pure Communist Party propaganda, and they pay the Washington Post to put it in there, and it's like it's the New York Magazine and the New York Times. It's not. You go to Berkeley, California, and the China Daily and Global Times is being delivered for free. They have this incredible propaganda machine that's disguised as news. That's really, they're foreign agents acting on our soil, and they're using money to distribute the propaganda. And they're good at it. And we as a country, we'd rather earn the money. You and I were talking off camera about friends of ours that do business in China, and they go to China and they get paid to give speeches. And
They won't say anything bad about them.
they would never say anything bad about them. And, there are people at think tanks whose wives teach the Chinese Communist Party members English and their family members English. They've never said one bad thing about China in any of their think tank reports. It's how China plays such a beautiful game of coercion through money that you say, how does it stop? Well, maybe we just need some thick disclosure requirements if Chinese money is coming in the country.
My issue is it's so pervasive and it's so deeply entwined with the political and economic system of the US and elsewhere that nobody stops it. It's like that, you know how it's like with the pharma companies and all of the others, right? This is not a world you want to get into
but that's the Achilles heel
rotting.
Of a democratic, capitalist-based system.
But let's talk about, let's say we can't change that bit yet, because it's not a quick fix. Mm-hmm. So we're going into a deadline that Trump put out.
The March 1st deadline.
The March 1st deadline.
Yeah.
We were talking off camera, that sounds like it's softening a bit. Uh-huh. But there is, I think, zero chance that the Chinese can agree anything about intellectual property and technology within 2 years, right? This is a complex, difficult negotiation because there isn't a rule of law that's applicable and easily enforced, right? Mm-hmm. So you have to figure some way of a trust-based system that will work. So I don't see that happening. If the US administration really is after the IP stuff, which is what you say that's the real game.
Well, I think it's just part of the real game, right? It's the militaristic aggression in the South China Sea. Right. It's their industrial policy that circumvents WTO rules. It's espionage and theft and the lying, cheating, and stealing that the Chinese do. We have to figure out how to stop it.
So therefore, if that's the case, if it's a really big game to play,
yeah,
then this March deadline is meaningless. And the markets are going to sniff this out pretty soon, right?
Right, and if you and I were the Chinese, we would do exactly what the Chinese did in their first overture to our negotiating team. All they said was, we will eliminate our trade imbalance with you over a 6-year period. It was brilliant in a number of ways. It looks like it gives Trump a win.
Yeah.
They only have potentially 2 more years of Trump anyway, so they're just trying to wait him out. We've been in these trade negotiations for a long time. If you think about when we first started engaging in trade negotiations with China, when she was at Mar-a-Lago, what's happened since that day? Not a damn thing.
No.
They're just playing the waiting game, which is they're really good at.
But then all I'm trying to think of this, does this increase the probability now that 7 goes in the RMB and it starts trading 8, 8.5, 9, because there is no conclusion. So the US has to play hardball, and global growth and Chinese exports are going to suffer.
This will not be determined by our government or theirs. Like, if all the training wheels came off the bikes, we'd already be at 8 or 9 on the RMB.
Yeah.
What you're asking is, will a trade impasse accelerate the move?
Yeah.
Absolutely. Will we have a trade impasse? Is there some sort of hybrid where they agree to some agreement on trade and then they agree to timetable a longer discussion on industrial policy and intellectual property theft? Maybe. Maybe Trump could call that a win.
Yeah.
I actually think it's going to be somewhere in the middle. I don't think it's going to come to blows or pencils down and walking away from one another. I think China's desperate to get something done because the trade talks, while they're small, we're talking about $50 or $100 billion a year. Right, we're talking about 10 or 25% tariffs on a total number of 500 billion.
Yeah.
So we're talking about 50 to 125 billion dollars, right? On an economy of 13 over there, an economy of 20 here, 20 trillion. Shouldn't matter. But we were just talking about their reserve number might only be 2 trillion.
That's right.
So if they're going to lose another 100 billion a year in tariffs, that's a real problem for them.
And what I've noticed is the decline in the value of the RMB pretty much offsets the tariffs. So if they were to increase the tariffs by 25%, to me, it's got 8 written all over it. It's just another way that I look at it. I just think that, they offset it as fast as they can. Now, what's weird is the RMB is a currency basket, essentially. But it seems the knock-on effect through the lack of trade as the euro falls, the Aussie falls, all of these things fall. So it's highly correlated, as we know. So that's why I'm just sensing that, and I know you don't really want to go necessarily to a catalyst point, but I'm feeling like there's a catalyst point racing towards us, which is a deadline that's not going to mean anything.
I agree.
It's going to be a half answer because nobody can actually create an answer. It's impossible to get an answer done. You said, okay, peak fiscal stimulus, February 23rd. Well, then by the time you get to March and April and May, what we've got is fading. I think the US economy is slightly weaker than that anyway. We're seeing the global economy fading. We're seeing the bond market telling us something. So to me, it's like, okay, we're rushing towards something and the capital numbers look like there's money leaving China right now and that there is something going on.
You've set it up properly, Raul. I mean, I don't want to be a near-term catalyst Armageddon person.
No, I get that.
But look at what's out there today. It's everything you just described, and you left out just a few things, right? We have the March 1st deadline for trade.
Yeah.
We have the mid-May European parliamentary elections where you're going to see, let's say, populism raise its ugly head once again.
Yeah.
You're going to see early elections in Greece. You're going to see the Italians go crazy again on the budget.
Yeah. You see what's going on in Spain? They're voting. The Catalans have got.
We're talking about a potential hard Brexit coming, in March? Literally, there are so many things going on right now that are and each in their own right is enormous.
So the market
is an enormous contributor to the global economy.
And the market is actually choosing to ignore them and hoping we get through every one of those speed bumps and don't fall over.
Not fall over. I think the market's priced as if we're going to walk through there squeaky clean. It's a fascinating time to be alive because I think the machines are running the ball game here, and it's really human interaction and human intuition that's going to determine the outcomes of many of these situations in the next 4 or 5 months.
So if people can't trade the RMB, what are the other obvious knock-on effects? As you know, I just say, well, if the world is going to shit, the US bond market is going to be the best place in the world.
Yeah, and by the way, you rightly called. You basically said all you need to own. I can't remember, it was bonds and diamonds.
That's right.
Right? And that was like 6 months ago. And you called it just right.
Yeah.
I mean, you get an A+ for that call. But it's just the beginning.
Yeah, and it feels to me, I'm looking at the currency market again, and it looks like the dollar looks like it wants to break higher again. I'm careful.
But wait, I thought when U.S. rates go lower, the dollar's going to get killed.
That's the argument.
And the dollar's going to lose its reserve status, and all of these things I'm hearing from all these people.
Exactly right.
I mean, I think they're all dead wrong.
I think they're dead wrong. I think the world has a problem, and there's not enough
I
dollars.
knew I liked you.
I think the world doesn't have enough dollars. I think China is the biggest problem with the shortage of dollars.
Yeah.
The dollar will go higher in any slowdown, I think, regardless of what rates do. Mm-hmm. And that's concerning. Looks like it's starting to happen now. The DXY broke 97 today or yesterday. And I look at things like the Aussie. And the Aussie for me is a great one because that's at the epicenter of all of this.
It is.
You know, if I'm looking at one thing, it's bonds. And I think the Aussie dollar is one of them. And the euro just seems...
Yeah, I mean, if the U.S. dollar is going to lose its reserve status, which currency are you going to own? You're going to own the pound? Because if there's a hard Brexit, it's going to go to parity.
Yeah.
Are you going to own the euro? Because if they have a recession, that's going below parity. You're going to own the RMB? No, you can't really spend it. You might as well just go buy another Monopoly game.
That's the problem.
What are you going to own?
What do you own? Yeah.
Well, you're going to own dollars.
Yeah.
That's what you're going to own.
Yeah. So let's see what happens with the Chinese thing. I think the story's building, and I'm waiting eagerly for the second part of this story because we talk about knock-on effects, and we're talking about the Aussie dollar and the US dollar and the US bond market. There's potentially a huge knock-on effect that everybody's missing, which I know you're putting together a thesis and some...
It's the most asymmetric trade ever seen in my entire life, and it's staring us right in the face.
Yeah.
And we will pick up on that the next time we get together.
Excellent, Carl. Thank you ever so much for coming in.
Thank you.
I look forward to it.